impact investing, how to find finances for those awesome startups and initiatives who are making a positive change on the environment and our society. So I'm Carl from Clean Tech for Estonia. And today we have beside me as well, Erki Aini, who is our CEO, and we turned his office into a studio. So he has to sit here. Yeah, as we said, then the faces that you saw here, these are fresh impact startups, experienced impact startups who want to share their knowledge. We have investment funds and support organizations. This event, so I'm gonna click on the short PowerPoint, one moment. Now, wait. Yes, there we go. Climate Finance Lab is the project that we're doing, and this will be like a final event in this project, and it's an international project, which but first I'm gonna go through the agenda fast. It's a little bit lagging here because of the connection, and in Czech Republic it's 2 o'clock at the moment, so the agenda is plus 1 hour in Estonia, and I'm gonna do a short intro, then we're gonna get to more interesting presenters and speakers. So hang in there. It's going to be in 4 parts. It's going to be a very packed event for next 2 hours. All the presenters will have about 5 to 10 minutes to share their experience and knowledge. And the first part is going to be intro about the project and impact investing funds, one from Estonia and one from Czechia. Then we're going to have startups who are already established and they have got funds already, so they will share this, and we will have then a short break, which will be followed by our startups in the program who are currently looking for financing, and they will share their story about the past few months when they've been in the program. And we're going to finish it off with a panel discussion between impact investors and startups. That will be a little bit longer session, maybe 30, 45 minutes or so. So let's continue. Before we move on, we encourage you to use Slido. You just go to slide.do and write there impact investing, so you can ask questions that we're going to then address during the discussion part in the final panel discussion. Yeah, or you can just write them under the Facebook event and comments. We have colleagues who are looking at those comments and answering you and writing down the questions. So quickly about the project itself, the whole thing why we are doing this is that we see that there is a lot of finances, especially in the CE region, who which are meant for fintech or some other sectors in the IT especially, but not so much at the moment in the impact area or for those organizations and initiatives that actually want to do a positive change. And this project is initially funded by EIT Climate Kick. It's the biggest climate innovation organization in Europe that we are closely working together. And we're doing it in partnership with impact hubs in Czechia. Therefore, where comes this international collaboration and sharing the experience, because it's a common problem in the whole CE region. And in this project, so quickly, we took in 3 startups and we gave them grants and individual mentoring, and we just started going with them, getting them investment ready and knocking on investors' doors. But this event is also about raising awareness. If you get more interest or questions about it, then under the Facebook event, you will find my email or Camilla's email in Czech Republic. So just write us or call us. And yeah, shortly about us and our main partner, Impact Hub as well. Erki, will you make a quick intro, a few minutes?
Yeah, so hi from my part as well, and thank you, Karl, for inviting me to my office. Pleasure to be here. As Karl mentioned, also Cleantech First is the Estonian cleantech startup support organization. So we fund, we seek, and we develop clean innovation ideas, but also entrepreneurs. We've been doing it actively since 2016, and mostly with the help of EIT Climate Kick. And since 2017, we're also the official partner for EIT Climate Kick. And we've been carrying out various entrepreneurial programs, but also educational programs, such as Climate Kick Business Accelerator, the world's biggest clean business ideas competition, Climate Launchpad. We have also a business acceleration program with the Ministry of Environment called Beamline Beta. We have seminars and also educational programs such as Pioneers into Practice, which is a flagship program for EIT Climate Kick on systems innovation. Together, within these 5 years, we've supported more than 50 startups. And out of these, we have funded about 30 startups with non-equity 1 million euros of funding. And these startups, in turn, have by today raised more than 15 million euros of investments and grants after graduating. So we can definitely be proud of our alumni, and our alumni are ranging from all sectors of clean tech. So from materials, transportation and logistics, buildings, constructions, new materials and chemicals, energy efficiency, storage and production, of course, and also ICT, IoT. So covering quite a broad range, as is seen, of course, in this slide. And from these sectors, the highest or the fastest growing categories are mainly, of course, as we are in Estonia, it's the green ICT and IoT. So a lot of digital solutions, but also sustainable transportation. So everybody's building a bicycle nowadays. So there's a lot of light traffic companies that are raising investments quite rapidly and also developing various kinds of electric vehicles. Yeah, I think that's a wrap up from my side.
Thanks. I've been given the privilege to talk about Impact Hub as well, who is our main partner in crime here. And we have also Petr, who is, I'm not giving you the word yet, but we'll be in a shortly talking about the impact funds in Czechia and also in the panel discussion. But Impact Hub is an international organization, a very large one with over 100 physical places, co-working places, and where they give business incubation. They collaborate with a lot of different stakeholders and really make a difference there. And they have like thousands of members, which is a big question why we don't have, for example, in Estonia, none of it yet. For example, they have, in Czechia, they have already 4 impact hubs. They are market leader in largest co-working space, biggest in acceleration. They have over 100 employees. So we would be focusing on that, maybe on panel as well, at least as one topic, like how to increase that in Estonia, because it's a major success, at least from our point of view. Yeah, and just a short reminder then that about the Slido, and we can continue with Marge Maidla, who is the founder of Estonia's first impact investment funds. Marge, can you turn on your, I will stop sharing.
Yes,
okay.
Hello everybody. Everything works. Okay, so hello, my name is Marge Maidla, and I am the founder and CEO of Limitless Impact Investments. We are the first impact investor in Estonia. And today I'm here to tell you a bit more about impact investing, what it is, to whom it is, why it's important, and so on. And let's get to it. So if I would ask you one very simple question, why do we need impact investing at all? Then the answer would be that there are just a lot of super complicated problems to solve. For example, World Economic Forum put together this report this year, and they tried to map out different risk categories based on their severeness and how likely they are to happen. And here on the slide, on the upper right corner, you can see the most likely and severe events that might happen. Many of them are from the environmental category, for example, extreme weather, biodiversity loss, natural disasters, and so on. But it's important to understand that those risks are interconnected. So if there will be extreme weather conditions, it will have results for the societal, geopolitical, or economic sectors as well. If there will be very bad and extreme natural disasters, most likely there will be food crisis, for example, as well, or water crisis. So the takeaway is that there are a lot of complicated problems, and we just need to do something to solve those. But we're lucky because there are companies out there who are solving those super complicated problems already. And to dig a bit deeper into the specific problem areas, I have here a couple of examples to look at. So for example, the food industry, let's take this one for the first example. Food industry accounts for 26% of all greenhouse gas emissions worldwide. And if we look at the food waste, then basically 1.3 billion tons of waste worldwide is created. Luckily, there's this company, an impact company called Karma, who is out there to help you rescue unsold meals. And there are similar companies to Karma as well in operating in other markets. Karma is from Sweden, but we have Too Good To Go, for example, in the UK, and we have in Estonia one new company called Foodler. They're operating, as I know, only for a couple of months and doing quite well. So those are just some of the examples out there. If you look at the air travel, then it has gone down with Corona, obviously, but it still accounts for 2% of global CO2 emissions, and the share is expected to rise. Once we are over the crisis, it will surely be the case. But luckily, we have Heart Aerospace, who is developing electric airliner for certified commercial flights already by 2026. So they are just a couple of examples out there who are working on very complicated problems. And there are also investors then who are focusing on exactly those companies, and they're financing them to help them solve the most complicated problems. So if Karma and Heart Aerospace, for example, want to scale and develop their innovations, then there need to be investors as well who are focusing on investing specifically in them. One thing I want to make clear, at least how we see impact investing at Limitless, and if I would ask you what is not impact investing, then the answer would be that impact investing is not philanthropy. So on this slide here, you can see that traditional philanthropy is rather something where you donate your money away for a cause, and there surely could be a positive impact coming out from it. But impact investors are on the par with traditional investors in a sense that they're also expecting financial returns from their investments. And another interesting area is responsible investing and investing into responsible companies. But I would like to make a distinction here. So impact investing is looking at companies who are solving a specific problem in society or in environment. But responsible businesses can be any company who is basically doing something responsibly. For example, they have good conditions for their employees, or they have very transparent management in the company, or maybe they're donating some money away from their profits. But it doesn't mean that they're specifically solving a specific impact problem. So that's the difference. And what about the returns then? To give you some stats from the recent reports published this year based on the previous year data and before that, we saw that impact investing is growing 50% on a yearly basis compared to traditional VCs, for example, that are growing their returns on 60% in the last 5 years, for example. And 83% of Nordic investors who are already investing in impact expect their portfolio to deliver at or above the market rate of return. And every year, impact investing as a sector is growing quite rapidly, as well as the assets under management. And a couple of words about us as well. Limitless Impact Investments were founded in 2019, and we are there to accelerate positive impact growth in the world by financing and consulting those companies who reduce harm for the planet, save and improve lives. We have 3 main sustainable development goals that we are focusing on as well, 3, 4, and 12. We are run and backed by Transferwise and Skype alumni. Me and Jorma Laiapea are the founders. So how do we go about impact investing? We do one thing a bit differently, in addition that we invest in impact companies compared to the traditional investors. So what do? We use revenue-based financing instead of equity financing, and that means that we don't take a stake in the company. We agree on a specific percentage with the company, and this percentage will be taken from the monthly revenue, and funds will eventually be returned to us during a specific time span. So basically, we don't take the equity, and we expect the investment back from the companies with a specific multiplier according to every company, and for every company the case would be a bit different. We are also consulting companies to help them understand their impact, set relevant KPIs and metrics so that they can understand whether they are on the impact course, so to say, and what they're about to achieve. If I talk about net impact, then I mean the difference in between the positive impact one company can create minus the negative impact as well. Because there can be companies who are creating a bit of positive impact, but the negative impact that's derived maybe from their supply chain or something else is actually bigger than the positive impacts. And we want to understand what's the real net impact that one company can have. To give you an example, maybe there's a company in Estonia that wants to create something out from bamboo. They are claiming that it's a better raw material compared to other materials, but they need to get the bamboo from Asia to Estonia. So there will be a massive cost for the environment still because of the supply chain. So we are going to look over all those details and help to understand companies what's the real impact that they are creating, and who's a fit for us. So we're looking companies with existing revenue already, at least 2,000 euros for the past couple of months. However, if the revenue is still a bit less than that, companies are still encouraged to talk with us because it really depends eventually on the product and the market the company is operating in. And we're looking for scalable products and services tackling climate change, digital health, or education mainly. And of course, the teams must be passionate about their goals. Our investment ticket starts from 50,000 euros, and we are not dependent on the traditional financing rounds. Therefore, we can provide the capital whenever company needs capital, really. And a quick example from our portfolio as well. Termtest is a digital health company, and they are helping GPs and doctors to streamline their evaluation process with their patients, mainly in the skin care area. During the corona, our investment helped them to quickly build an additional feature, and 2 weeks later, the feature was ready, and patients could take part in teleconsultations from the comfort of their home. That's about us for now. Please feel free to contact hi@limitless.fund or check out our web or LinkedIn. And that's it from me now. Thank you.
All right. Thanks, Marga, a lot, especially about the revenue-based model that we're going to maybe discuss during the panel as well. But next up, we have Petr. He's the father of Czechia's impact investments, a lot of experience there. Petr, will you share us the story?
Yeah, with pleasure. Can you see my screen with the presentation?
Yeah, perfect.
Fantastic. Hello, everyone. It's a real pleasure and honor to be here today. My name is Peter Vitek, and I'm the co-founder of Impact Hubs in the Czech Republic, and also privileged to be one of the two co-founders of Tilia Impact Ventures. And today I'm gonna take you real quick through an introduction of our fund. And hopefully we'll get into the detail during the conversation. I'll be very happy to take your questions should you be interested in something in greater detail. So as Marge has already demonstrated, we're navigating a space of financial return and impact, right? Of course, there is risk-adjusted market return is being talked about. So we can see that there is a traditional investing, but as you move towards right, you have some negative screening criteria. We call it do not harm, or values alignment, ESG screening, and you move into impact investing, which has, the deeper you go with impact, significant overlap with venture philanthropy, and of course you have the traditional philanthropy here. When we actually talk about impact, the deeper we go the rabbit hole, the more complicated it seems. But I'm sharing this slide to share one of the definitions by Jin, and it's basically about three things: intentionality, return expectations, that's a big question mark, and impact measurement and management. And basically, yeah, in a nutshell, my personal vision is that as traditional investing entails return and risk considerations, I believe that it's only a matter of time when impact will become an inherent third criterion for any investor to consider, and it'll become the new normal. And with Tilia Impact Ventures, we're trying to contribute a little bit with deconstructing impact, understanding it, because it's more complicated than it seems really. This is a little bit of our journey. We started early, we started in 2018 we've made 4 investments. I'm very happy we have Petr Bacha here today with Miva, who will talk about it in a detail. So it's been quite an eventful journey, and perhaps we'll talk about it in greater detail later on. Fund overview. It's a closed-end 9-year fund. We're looking for a very broad portfolio of investments. We're basically not disregarding any of the 17 SDGs, and we're happy to explore our additionality to any project that's impact first. So the impact is the reason why to make an investment, and typically risk and return are the reasons why not to do it, because perhaps it's too risky for us, or the financial sustainability is too low. When it comes to investment phase, we're starting from the proof of concept period. So we're doing seed investments, and down the line, when it comes to size of the investment, it's starting at about 30K euros up to 200,000 euros. We've made 4 investments already. And when it comes to structures that we use, typically convertible loans, but we can also do equity. We're now looking at a deal that comes from that's quite deep social impact. So we're considering a loan there. As you can see, I'm taking it super quick, just to give you an overview. As I already said earlier, we're looking at impact first approach, and we're trying to develop a methodology that's diligent yet lean. So we have a scoring table. We're looking at the best practice from abroad. We've really learned a lot from the impact management project. So I really recommend, if you're interested, going there and explore more. Bridges Ventures are amazing in this respect. And also Tonic has been a source of inspiration there. We have a standard investment committee, and we're very pleased to have some of the big names here in the Czech Republic or in the region to be part of the investment committee. They take the decisions on investments. And we also are proud to have advisory board members, Georg from Ashoka Austria, Cecile, and Philip. So we're very happy to have them. And tomorrow we have another advisory board meeting. So I'm very looking forward to consult some of the open questions we have with them. I'm not going to take you through this slide, but this is just to illustrate that our theory of change, we're trying to walk the talk and really be very mindful and intentional about our impact, where we want to make a difference. So again, if you're interested, we can come back to this, but in a nutshell, we want to deliver impact via the investment companies, obviously, but also we would like to, share and perhaps act as a role model for others in the CE region to initiate impact investment funds. And all we do is available to be shared, and we're really open to collaboration, and we're also keen to learn. And hopefully by walking the path of impact investment, more investors will see what are the pros and cons of impact investment, and will join in the movement and start incorporating impact considerations for their daily decision making. In a brief, I think I've already covered most of this. Yeah, we have invested about half of the funds already. So we're looking to perhaps explore the options to build a second fund, probably regional, but that's still at least 2 years from now. So we're already exploring some of the options there. That was me in a nutshell. I'm very happy to be here again, and I'm giving the floor back to Carl and Erkki.
Yeah, thanks a lot, Petru. That was really insightful. Next, we will now move on to startups who have already attracted financing and what's their point of view of that process and experience. So first off, we will have Merit. Merit, well, so is it? Yeah, from Single Earth. Yeah, got it. No worries, all good. Yeah, so Merit, will you share us your experience with us?
Yes, gladly.
Or it's yours.
All right, so hi everybody, super happy to be here. So let me just get my slides up and share a bit about my experience. So I hope you can see my slides. Yes, so first of all, I'm Merit. I'm the CEO and co-founder of Single Earth, and I will use these 5 minutes to briefly tell you what we're doing, and then also my learnings from talking to different investors. So the problem that we're tackling at Single Earth is the biodiversity loss and the immense carbon emissions and the amount of carbon that we have up in the atmosphere, the CO2. And especially the problem that there is a lot of intensive forestry and there's a lot of peat destruction. There are a lot of ways people intensively use land, and all this intensive land management is causing, is destroying like these tools, these natural tools that we have to mitigate climate change. So instead of allowing nature to absorb CO2 from the atmosphere, we are destroying them and not allowing them to heal what's broken. And in addition to this carbon problem, there's another growing problem, which is habitats. So while people use intensive forestry and other land management methods, we are destroying the habitats and driving towards the big biodiversity loss. So the problem that we've been tackling is how to make forests and wetlands financially feasible for the forest owners, the landowners, without being clear-cut or without being destroyed. So this is something that Single Earth is tackling. Because natural ecosystems keep us alive, so our goal is to create financial reward to forest and landowners through carbon offset and other corporate climate action activities, such as biodiversity offset and others. So this is the problems that we have been tackling. And when talking about impact investments, I think like one of the most interesting concepts that I've been become familiar with is moonshot ideas, which is something that seems to be very attractive to investors. And the concept of moonshot ideas is that there are huge problems out there, and the problems have already been discussed by the previous presenters. And there are startups who are tackling these big problems with radical solutions and breakthrough technology. And these are like one of the biggest challenges that we're trying to tackle. So from my experience, these moonshot ideas are really, really, really attractive to investors. But it also means that the investors that are interested in these topics, they are also going to be like more strategically with you on the road, because they also want to tackle the same problems. So I think that the main difference between traditional investors and those who make impact investments is that they're not just going to be your financial investors, they're probably also going to help you along the way. They're probably also will be there to tackle this moonshot idea or how to bring these solutions into life, which is, I think, a very good starting point for a starting company, especially those that are tackling these big problems. But as has been already mentioned before, then some of the criteria still fit in this category as well. So the solution has to be highly scalable, especially if you're talking about like this software solution as we're building out at Single Earth. Another thing that would be interesting to point out is that these moonshot ideas usually are dealing in markets that are just emerging, like they haven't been fully developed yet. So they are developing markets. There are these new ideas that have high risk, but also the possible high returns. So the investments made in these fields are probably going to be long-term investments with long-term potential. So you're today building something that is going to be relevant perhaps in 2, 3, or 5 years time. So I think that's also a very interesting angle to like these moonshot ideas. And that also means that not all investors will be interested in this. So those who are rigidly focusing on getting their returns of from his investments back in, like, let's say 7 years or 10 years, so they might not be willing to take this risk of seeing how the market is just developing yet. So my suggestion would be to be open about the market potential, but also let the investors always know that this is like a developing market. So the risks are high, but the potential is also high. And also like be bold enough to have these moonshot ideas, to look at markets in a way that they haven't been looked at before, and find ways how you can disrupt the existing intensive economy that is driving climate change and all these other things that we're tackling, and find ways how you can get to the root of the main problem and try to tackle that. So this is, I think I only have 5 minutes. So thanks for this time, and I hope it was useful for other startups. And feel free to contact me if you'd like to learn more.
All right, thanks a lot, Merit. It was very fast. A lot of information. Love your energy. Next up, we will have Miva Petrpacha, if I'm saying it correctly or almost correctly. I tried to do it before with my Czech friends, but.
Good afternoon. Good afternoon. Oh, you did very well. Well done.
Yes.
Bacha, it really is.
Mm-hmm.
So let me share my screen, and I will probably take about 8 minutes. It might be a bit slower, and I'll also give a quick introduction of what we do as a company, and then share some experiences from the journey, especially focus on investors. So introducing Miva, Miva is a name which stands for minimum waste. And what we did is basically anchoring the mission of the company into our name. And I started Miva about 5 years ago. And the whole idea behind that was to use technology to help minimizing waste in the whole supply chain. And the key word behind that was actually, preventing the problem before it happens, which is a very simple idea. But if you think about the delivery of products today, you can see that it's extremely challenging to actually avoid creating of waste. Because if you look at the supply chain of today, of especially the FMCG products, but not only, you can see that the delivery is very much done in what is called the linear model of delivery. So the products are made and then delivered to retailers. Part of the waste is being created there from the secondary and tertiary packaging, and then it goes to home to the final users. And of course, this is what we all know, trying to take the packaging and put it into the right recycling bins. The point, however, which I think says a lot, is that something is recyclable doesn't mean that actually gets recycled. So as a society, we somehow believe that recycling is the solution to this waste problem, but the reality is that it is actually not. And as the consumption has been growing, the recycling actually does not have the quality to keep up with that speed. So the waste is being generated in a higher speed, and the recycling is not keeping up, and a lot of waste is ending up at the end with the nature. So what Miva is doing is actually introducing a circular delivery model, and we are dividing this delivery into 3 closed loops. So when we design something which is to be recyclable, we actually keep it in the loop. So we are responsible for the proper recycling. But in the as the main idea here is actually before we recycle, we reuse. So we are looking into a reuse of materials, into reuse of transport packaging from the brand to retailer, and for the reuse of packaging from the retailer to home. So these are the sort of three closed loops. And if they are applied in the scale, we have calculated based on the life cycle assessment that MIWA can be more than 70% more efficient from the sustainability perspective. What is very important in the concept is not only reusability as such, but also, as I said at the start of the presentation, is actually use of technology. So what we are introducing is a heavy use of data to the packaging. And if you look at the systems today, when a lot of products are packed into plastic, plastic is of course very light and very cheap. So these are very, very valuable equities of such a packaging. But what we are trying to do is to make packaging smarter, which means we are fighting against the single use, not by being cheaper or by being lighter, but actually adding tangible benefits to the actual final users. Here is visualized our product. And you can see on the left side the solution for the business to business, which is basically the solution connecting the brand or the producer and the retailer. And you can see a large container, we call it capsule, which is provided to the brand as a packaging as a service. The brand puts the product into the capsule with the standard logistics. It's delivered to retailer. Retailer puts it into what we call a MIWA module, or it's a smart shelf, which can read the capsule and dispense the goods from the capsule. And once this packaging is empty, we take care as MIWA for the reverse logistics. So we collect the empty used capsules from the retailer and we bring it to the sanitation process and prepare it for the next round. And what we have introduced for the B2C loop is also a smart container. And the beauty of the smart container here is that it's not only helping you to shop and take the product, but it's also carrying the data. So you can use this cup to actually open the dispenser, to open the smart shelf. Then you take the product as much as you need, and you carry home not only the actual product protected in a good packaging, but you actually carry also information about the product. And that means you also can get a lot of inspiration, and mainly you can also engage further into certain benefits, which from our perspective are driven by the reusability, but you can imagine that the brand can offer, you know, special credits, or of course provide you a tangible benefits in a very simplistic way. It can also allow you to shop cheaper in the next time you use the cup. These are some of the clients we currently work with. We have been very fortunate that the timing for sustainability innovation is very good. So we have a very interesting pipeline of big corporate names coming from brand world, but also from the retailers. This is how the technology looks dressed up, and you can see that this is from the piloting operation we do with Nestlé in Switzerland, and we actually apply our technology for the pet care, which is for Purina, and also for Nescafe in the instant coffee. So this is about MIWA, and just to go on the first slide to have a cover, and I would maybe share a few notes how the investment journey has been with us. And maybe first of all, I would say that it was a very hard journey. It was definitely not easy. I read very often, you know, the stories how the startups got financed and how quickly things happen. In our case, I have to say it was very long journey. And the reason behind that, I see that we are actually not only innovating a lot of things in the supply chain, but we are actually in the need to produce quite a complex hardware solution, which requires Not only, of course, the skills to develop it, but it requires a lot of skills to manufacture it and to make sure that you can service it. So if I look back about 3 years ago, when we first time started to talk to investors, I can understand now that they were quite hesitant to believe that a company of about 8 people at that moment is able to deliver a real product on this type of complexity. Couple of things we have learned over the journey. I would say, first of all, I would advise everybody to really get into the team, especially for the fundraising, somebody who has done it before. And here I'm not talking about getting a mentor or a financial advisor. I really would advise to talk to a founder of a startup who has done the journey. I cannot stress that enough. We have actually not done it. We have more focus on looking into, financial advisory, variety of people, of course, having a lot of opinion. I personally believe that the founder going through the process will always share something more valuable as founder to founder. So I would advise to any founders who are here listening, please, if you go into financing, look for another founder and talk to that person. I think it's very, very important. And it can be also a founder who has not succeeded, but the process, I think, is very unique. I think it's related to the fact that the journey which will be in front of you, ahead of you, is quite long and can be pretty frustrating. You will have a lot of meetings which will simply have a lot of questions, a lot of challenges to you. They will be asking you, are you really sure? Do you really know what you are doing? Even to a person who has quite some ego and a bit of experience or a lot of experience, this is definitely bringing a person down. So you need to be ready for it. And you need to understand that this is going to happen, and it's going to be a lot of meetings, which will be very painful. That is related to, let's say, another advice on that. Please choose who you want to talk to. There's a lot of people on the market with potential a lot of money. There is also a lot of people without money, which actually act as investors or advisors to investors. Please do your research. Do not use your valuable time to talk to everybody. It is simply not worth it. And I would say we did that quite well in MIWA, because we knew from the beginning we rather prefer an institutional investor, and actually coming from the impact world or having a relevance to the impact world. So we had a pretty clear set of criteria. It doesn't mean that we didn't go into meetings which were not valuable, but I think it's very important to set a very, very good criteria who you want to talk to, because your time is quite valuable. And I would say the last advice on this time frame, be ready for a pressure. I think it is very maybe a simple advice, but I would say that starting a company, I would encourage everybody to give it a try, but at the same time, it is simply not for everybody. It is really a lot of pressure, not only to find the money, but also once you receive the money to take the responsibility and deal with it. And in my case, for example, I have an advantage of being an entrepreneur for most of my life, so I can somehow deal with it. But I can imagine, and I have met a few founders around me that have quite a hard time to really deal with the pressure, because it is at the end not about creating, but it's also about managing the company. So once you decide to go to investors, be ready that the pressure is actually very high when you are looking for the money, but it's maybe even higher once you receive the money. And this is sometimes being forgotten. So I would really give this advice to every founder here who is listening. And that would be all for me at the moment. I will be part of the panel discussion, so I'm very happy to take any more questions.
Super. Thank you very much, Peter. Thank you for your presentation. And afterwards, we will have a Q&A session as well. Now, we would like to invite here Ann Runnell from Reverse Resources. It feels like we have known each other for years. We have. So I'm more excited than ever to listen to your story on the impactful of your business.
Thank you. Just sharing my screen. A second. I'm very glad to be here as well. Thank you, Clean Tech Forest, for this opportunity. Reverse Resources is a company that I started 6 years ago. And after a pivot that we did 2 years ago, since the beginning, actually, the mission has stayed the same, to help large fashion brands reduce the use of virgin materials and replace it with recycled ones. So we're really looking at the fashion industry from top down, from a very systemic level. But 2 years ago, we started to focus very specifically into the cutting scraps coming out of the garment production in the factories in Asia. In the mission of helping to reduce virgin materials and replace it with recycling materials, we are looking at the market of 1% currently, how much the fashion industry is currently using recycled materials from their own waste. But there is a huge number of different technologies that are now able to turn textile waste into very high quality new yarns and fabrics. And the industry is expecting a boom in that sector. We are estimating that it's going to be 40% of all the fabrics that are going to be recycled in 10 years' time. And that all of that resource needs better steering than what we see in the market right now. So we are, with our approach, looking at the 9 billion total addressable market. The problem that we are solving is in the whole supply chain of how textile waste is from the source through a number of traders taken to the recyclers right now. Factories who are generating the waste are not segregating it. They mix it up and it loses its value instantly. It goes through 4 or 5 different middlemen before reaching to the recyclers, and recyclers that have no idea what it contains or where it came from. And throughout the years, we've found brought a lot of evidence of this situation being a majority in 20 countries across Europe and Asia. The trading sector is taking 90% of the price of the waste that the recyclers are paying. Factories aren't getting a fair price for the waste, and recyclers are spending too much on sourcing the waste. So Reverse Resources is a platform that helps to clean up that supply chain, make sure that there is always only one middleman, and there's an end-to-end transparency provided on both sides. We are kind of like an Uber for waste, which I know it sounds cheesy, but this is easiest to explain, that we are connecting supply and demand and then finding a middleman to deliver it. But on top of that, we are providing statistics to the brands who want to trace their own waste. We are creating revenues from several points in that supply chain by tracing each ton of waste through the whole supply chain. It's transaction fees, it's fees from factories to prove where their waste was ending up at, it's fees from brands from tracing their waste from their facilities, and waste handlers and recyclers also paying either per volume or per transaction. We are currently mainly working with factories in Bangladesh, shipping waste from Bangladesh to a number of recyclers across Europe and Asia. The demand for clean and well-traced waste is huge compared to the supply, and the supply is stuck behind the fact that brands who are producing in those developing countries, they need to push it. They need to tell to their factories that you have to segregate your waste and you have to trace it. Otherwise, we cannot scale up the circular economy together. So for us, the biggest challenge has been getting the factories on the platform. But through the projects that we have launched recently with different brands directly, as well as collaboration platform projects with Global Fashion Agenda or P4G and others, we have a very strong path of scaling up. We're starting to scale up already this year. We have right now focused on cutting scraps from garment production, but the same problem applies in home textiles, leather and footwear waste. We are doing trials around dead stock materials, fabrics from production, and also post-consumer waste tracing. So there is a lot of scope for solving these waste flows with the approach that we have developed. And we have a very diverse team. The headquarters in Estonia, but we have team members in France, Netherlands, Poland, as well as Bangladesh. And a lot of experience from both software, IT sector and textile industry. And we are currently fundraising. So far, we have already raised €1 million, roughly, out of which 300K has come as convertible notes, and the rest has been given to us as grants and awards. So we have been going through a very unusual path in our fundraising, and this unusual path continues because we are really creating a new market and doing something quite disruptive. And it's very difficult for anyone to understand the potential of it because the investors are here, the market is in Asia, where there aren't so much impact investors. In Bangladesh, I just discovered that they actually do have angel network, which was a positive surprise to me. And now we are talking to them, for example. But yeah, investing space has been difficult for us, and it has been easier to talk to grantors and awards and things like that. But I stop now, and I am happy to join the panel later for any questions and discussions.
Yeah, yeah, exactly. So thanks a lot, Anne. We will continue this discussion soon. Now let's take a 5-minute break, everybody, and come back in 5 minutes. So and continue with our startups in the program. So they will actually start pitching now. They are looking for investments as well, and they will tell their journey as well in the program. And after that, we will have the panel. Yeah. So see you in 5 minutes, everybody.
change your mind, 'cause it may be greener on the other side, baby. But right now, in my arms is where you belong, baby. Baby, don't let the green grass fool you. Oh, don't let it change your mind, baby. Baby, don't let green grass fool you. Don't you let it change your mind. No, no. Don't let it change your mind.
Paranoid and pissed off. Now that I got the money, 50 acres and a Model A, right in the middle of Trump country. I told you there goes the neighborhood. Now Mr. ain't so funny. I see you looking out your window. Can't wait to call the police on me. When I know you think I'm up to something, I'm just eating, I was still hungry. And this is mine, now legit, I ain't leaving and you can't take it from me. I remember when you used to tell me, nigga run, go back where you come from. Nigga run, go back where you come from. We don't want your kind, we think you's a dog.
All right, so we're back on live. We will continue now with our awesome startups in the program and start with a Czech startup called Rekola Bike Share. And we have Ješek here. So
hi.
Take it away, please. You have around like 7-8 minutes or so. And if somebody wants to ask a question in the on the Facebook or so, then we have a few minutes for them to answer as well. But otherwise, just take it away.
Definitely, thank you. Hi. So yeah, I'm Ješek and I'm founder of Rekola Bike Sharing. And we started like 7 years ago, you know. And in that time, some things was quite the same as we have it right now. So we are like using far more cars in the streets than we had to, and for some of these trips, the bike was and still is the quickest and most comfortable way to be traveling through the city. And still, you know, lots of politicians was interested more in building cities for the cars and also for the people. But in that time, the bike sharing, which could be like solution for this like transportation demand, was mostly station based. So you basically need the station built in the city, and you need to grab the bike in these stations and return it with these stations as well. And we say, well, bike sharing, you know, in the bike sharing even world, that there is the bike, there is sharing, but there is not like the stations in any way. So it should be about the bikes, and we basically get own bikes from the people, and we repair it. We paint it in pink, and we put it in the streets with some kind of mobile application where you can see where is the nearest bike. And this is even in our name, you know, like Rekola in Czech language, the Re for recycling, and the Kola means bicycles. So it was like recycling bicycles in various cars. in 2013. And from that, we basically grow from Prague, to other cities in Czech Republic. And we in 2016 we get our first and still the only one investment. And nowadays we had about like 300,000 of registered users and around 700,000 of rides this year. And in the meantime, even that there was like our market was named as micromobility. And quite good traction. You probably know lots of like scooter sharing company. Some of them with respect to the city and to the public space. Some of them without. And we like after like these all years, we are quite effective in like getting people to the bikes, because lots of people, especially in Czech Republic, but I would say in general around Czech Republic, they don't know how to use micromobility or bike as a transportation tool. They are quite used to use it as a sport tool. So we are like teaching them how to use the bike and how we can help them to transfer through the city in a quickest and most efficient way. And this is why we have even like up to 5 or 4 times bigger the ridership, which means like the number of rides per bike per day. So we are quite effective of that, even in like the numbers. And this is why we even have like the positive unit economics as well, which is like in micromobility quite interesting thing. And we as well providing the data to the municipality. So we are helping to build the infrastructure where is most needs to be done, and the infrastructure, as there are like so many papers on that. If the city builds infrastructure to micromobility, then lots of people start using bike because of that. So right now, we think we are ready to scale to new markets abroad, Czech Republic, and even in September we start operation in Bratislava to prove it that we can scale our solutions outside, and the numbers looks sustainable. It looks really good. So we think we are ready for investment to like fuel this scaling, because there are lots of cities who doesn't have like any micromobility solution, or who has like bad or like very space to provide better service, and to convert lots of people from cars to bikes or to under micromobility as well. So this is why we are in this program, and we are interested in like I would say like normal venture capital, but as well as in impact investment. And this is where really like Peter and Vitek help us to iterate through the pitch deck and how we can like approach the impact investment funds and what it could be interested for them in our story, and we get lots of feedback. So right now we are in the stage where we are like finishing the small bridge, and we are going to close the proper round, we think, in the next year. So yeah, that's our journey, and I would be interested in any questions or anything. Yeah.
All right. Thanks a lot. So what's your ambition? You've been on the market for 7 years. What's up for the next 5 years, or what you're gonna do? Where you're gonna grow?
Well, I think in like even for example in Czech Republic, in Prague, we have the modal split, which is like how many people, for example, using the bike. It's around 1.5 or 2% of like every transportation. So just through a tiny amount of it is nowadays in the bike or micromobility as a general, like shared or own, doesn't matter. So I think think we see their potential to be like easily up to like 20%, you know, and we are seeing it in Paris. You doesn't have to think about, okay, Amsterdam or, you know, Helsinki or whatever, you know, even in Paris, it's really like shifting quite quickly. So I think it's really most about political like will, and this is why we are trying to provide the data, as I mentioned. So I think what we will be seeing within like a few years is to somehow really like push forward in the cities, and there are like multiple even like small cities, you know, to about like 100,000 of inhabitants, where easily could be a lot of like micromobility going there as well.
Okay, let's thank you very much, Vitek.
Yeah, thank you.
Let's move on with, we have next up, we have Smart Swap from Estonia, from a circular business model as well, quite experimental. So Heikki, the floor is yours.
Hello, everyone. Yes, hello. I hope you can see my presentation. But before I start with the presentation, let me tell me about my journey. And it has been not a quite a ride, but excellent ride. And Cleantech Forest team and Climate Gig team has helped me quite a bit. I was not struggling, but I was deep in my daily doings to start the business and to get as much revenue in as possible. But thanks to the Karl, Erki and Indrek and all the other people involved, I have been now more concentrating about the concept, what I'm exactly doing or what we are exactly doing and what we should be doing, where the most revenues are, where the biggest impact is, and so on. And of course, helped us with a small grant as well. So it has helped me to improve bits and pieces of the technology that we are using. But now let's talk about what we are doing. Smart Swap is, sorry, I'll move a bit. Smart Swap is reusers marketplace to give and order items for free. The problem what we are trying to solve is that businesses and organizations throw away millions of perfectly usable items on an annual basis, and they do it out of convenience or even more from out of the inconvenience of giving those items away or trying to find the reuser. And especially bad is the situation on furniture or a second-hand furniture market for businesses and business to consumers. The solution what we are providing is that you don't have to throw those items away. Through our marketplace, you can do it fast and easy. And we handle basically all the logistics, and it's also cost-wise very, very good opportunity for the users who are ordering items. We launched in January 2020. We have now more than 5,000 users. We have carried out more than 4,000 swaps, and out of those 4,000 transactions, more than 3,500 are actually furniture items. The gross value of all the swaps has been around 300,000 euros, and we have saved 225 tons of CO2 so far. Our business model is pretty straightforward. We charge commission on all the different types of deliveries, and to bigger organizations and businesses who want to get rid of surplus items, we charge recycling fee, or in our case, reusing fee. And that is 50% lower than the traditional put into waste fee. To those companies, we offer a possibility to reduce the waste almost to the zero in some of the cases, also save cost on the putting items into a trash, and we offer full service from starting, taking picture of the items, measuring, putting up to our marketplace, up to the logistics to the final user. So far, this is what we have done. At the moment, we are here. We started from absolute zero revenues, and for the last quarter of 2020, we're going to average on 4,000 euros a month, and we plan to be significantly bigger in the next 36 months or so. At the moment, we are concentrating our efforts on a very specific market, and that is the offices furniture. And offices furniture market is just inside of Europe. It's 180 million euros opportunity for us, but that doesn't count in HoReCa sector or car dealerships or any other dealerships, warehouses and shops. You can see that from the offline second-hand market, we differ quite a bit. That's on the right side, but even if we compare us to the Facebook marketplace and other traditional online marketplaces, we still cover a significantly larger part of the market. Our competitive advantages are that we are first to this specific market. We have very strong environmental and social impact, and we have a price advantage, and we are easy to use, and we are going to be cross-border in next 3 to 4 months time. This is maybe not so important, but what we are looking for is seed round financing of 150,000 euros at 1.5 million euros pre-money valuation, and we gonna achieve in 18 months more than 2,000 transactions a month, 80,000 euros in revenues, and we're gonna have more than 35,000 users. And we're gonna be offering our services in Baltics and Finland, and hopefully as well in Sweden. Those are the milestones we have set as our milestones that we should be able to reach in 18 months time. And our team had a lot of experience in launching different products, doing great marketing stunts, and I personally have more than 10 years of experience in different startups businesses. So this is all about us. All your questions are now welcome.
Perfect. Thank you very much, Heikki. We also understand that there's a bit of a time lag, like 30 seconds to a minute, as soon as our discussion ends to the live feed. So that's why our previous questions from the Facebook feed didn't reach Recola. So sorry for that. But the audience, if you have questions, post them under Facebook Live. We'll take them up as well. So Heikki, giving away free stuff, that's a very difficult market, I kind of assume. How do your customers take it? Or how do you sell yourselves to your customers? Has it been easy? I understand your track record has increased quite a lot in these past months. So how do you do that? What's the kind of how do they take you?
It's let's say it's in a way it's revolutionary and innovative, but in a way it's absolutely traditional. The thing is that up until today, a lot of the big businesses, when they have surplus items, let's say you have the full floor of furniture laying around, and your lease agreement is either finishing soon or you're just moving out, and then you suddenly end up with 500 tables. And usually the traditional business or businesses who are not in selling the furniture, they don't have dedicated team to get rid of the furniture. They don't know how to price it, and it takes months and months and months to get rid of. So the easiest way or the most convenient way is just to make a call, ask how much it is to burn it or to put it into waste or the transportation, and problem solved. But you still pay for it, and you pay quite a lot. Now what we are trying to achieve is that we have a large network of businesses and individuals, and whenever something like this comes up, you can actually get rid of all the stuff within limited time. Is it 48 hours or a couple of weeks? But you get it done. And we have a really good example from last week. Friday morning, I was taking pictures of the full floor here in Tallinn, 250 different furniture items. And I uploaded a video to our Facebook feed, and I also put those items to our SmartSwap site. And it took us less than 2 hours to empty the full floor, because we didn't ask any price for any tables. The table itself, we had 75 tables, each one worth of 150 to 200 euros if you take a look at it. But you have to get rid of it fast, and the company doesn't care about the money. They just have to clarify the rooms, and it was done. And we made money on the deliveries and on this side, and everyone was happy. So all the recipients were happy, we were happy, and all the company who had to get rid of the stuff was happy.
Impressive. So what's been your biggest deal?
Biggest deal? Yes, the Friday deal was the biggest deal, but it was equally as big as the deal what we did in October. To get rid of the full floor, it's roughly 4,000 euros in revenue for us. And that's just one deal, and that's just from the recycling side. On top of that, all the deliveries where we charge our commission, that is what we generate on top of it.
So also there's a lot of hotels being currently underused. Yes. So I understand that's also one part of your business, right? Because at the moment they're maybe investing into refurbishing or updating, and they want to get rid of their old stuff.
In the future, yes, but we missed 3 big opportunities in Tallinn. 3 major hotels were refurbished, but those hotels, they had time enough to try to sell it. They had several months to prepare, and they basically sold everything. So we didn't make any money on the hotels, but we are doing pretty well already, yes, and growing bit by bit.
That is super nice to hear. I think currently we don't have any questions from the audience.
Yeah, maybe let's move on with Opera Varna and Jan Harvat. Can you tell us how to fix all the things in the world?
Hi. I am here. Do you hear me?
Yes, perfect.
Okay, I will share my pitch deck. Do you see it now good?
Yes, nice and clear.
Okay. So I will tell something about our project. Opera Varna is on market 5 years, but until a few years, we are bigger and bigger. It's the biggest network of repairmen and product services, okay? Which problem we are solving is the problem with products which are ending too soon on landfills. And we are solving the problems with CO2 emissions from producing non-quality products. And in Czech Republic, people and companies can't find reliable repairmen because they are older, and we have got plenty repairers in our network. So we have got 2 solutions. One solution is B2C solution. It's our website, operavarna.cz, where everyone can find the nearest repairer from their locality. In past few years, we made 6,200 orders, and people can easily repairman because I said it. So far, we have got 1,800 repairers registered, hobby or profit. But what is more important now, it's to B2B solution. We are helping the companies to find their repairman on their guarantee or after guarantee service. We made 1,000 successful orders in past 1 year. So this is the way which we are going now. We have got about 200 professional technicians in our database. It's electricians or different sectors, yes. And we have got now 15 professionals contracted technicians in Opera Varna CZ. So now our customers, big customers are, for example, MOL CZ or Decathlon. And in progress, it's more companies which we are negotiating now. It's, for example, AG Foods or big cooperative insurance company or global assistance or some companies from fitness sector. Yes, our business model is based, it's a little bit complicated. Yes, we have got 3 business models. We have got transaction model, which we take 75 crowns from one order. We have got a commission model, which we take 25% in categories, for example, mobile phones or laptops. We have got some contracted services and they give us some commission. And now we have got our service provider model, which we take about 1,000 Czech crowns from one order. It's especially in categories fitness or garden categories. In B2B model, it's different, but we have got about 1,000 crowns from one order too. We have got many successes. We won some competitions, for example, second place in SDG awards, or in this year we won Aeon Energy Globe awards in product category. Yes, competitive landscape is not small. For example, in Czech Republic, there is, as you see, 845 million euro turnover in a service area. So it's not small. Our advantages before, for example, normal service companies is that normal repairers are often small and regional, and we cover a whole country, and we have got good marketing and PR. So small services can't do marketing themselves. Okay. Normal services are specialized, especially on 1 or 2 categories, but we can find repairmen on majority of products in one place. We have got similar projects in Czech Republic, but we are the only one project which is specialized only on repair things, with all positive impacts on environment. We have got in our network both professional repairmen and companies, as well as hobby repairmen. So we can find repair on everything. Yes. If we will go to European Union market, it's really big. I have got one data from Eurostat, and there is 31 billion euro turnover per year. So if we will take only 1% of European market in the future, it will be turnover about 3 billion euro. Now we have got about 3,000 orders per year, but in 3 years, we would like to have about 25,000 orders. About economy, now we have got EBITDA small because it's in the beginnings, about 47,000 Czech crowns, but in year 2023, we would like to have sales about 42 million Czech crowns and EBITDA about 5.7 million Czech crowns. So we are raising money now. We do not need much now because this money is only for Czech market. If this will happen, if this will appear to be good, I think in 1 or 2 years, I believe that we will go to second round to give money, to take money for expanding for all European market or some other countries. Why to invest to us? We have got full of experience. We can cover all cycle of products, so produce, buy, repair, and recycle. And we have got one big advantage because European market will grow because of EU legislation, right to repair. Because from this year, from February, new government new legislation will be, and all products in European market will have to be repairable. So it's our big advantage now, and now we want to take it and sell it. Now I have got one environmental impact studies. We will save in 3 years about 20 or 25,000 products. We will save about 576 tons of waste, and we will save 3,500 tons of CO2. So it's not much, but we are small companies. In European market, it will be different. In our team, it's me and my wife and some finance and accounting. And now we are in the middle of hiring a CSO because we really need someone who will make sales. So we are looking for a chief sales operative. And now I have got one really good person, which maybe will be the right person. Summary, I said everything. We would like to have turnover about 40 million Czech crowns sales in 3 years. And that's all. Thank you.
Jan, thank you very much. Very interesting case. Maybe one classic question to you. What's the biggest issue you're tackling with at the moment, or what are you doing to get to the next step?
Next step is to grow in Czech market, to have more and more customers. As I said, we are negotiating with, for example, Cooperativa. It's a really big insurance company. So I think in 1 or 2 months, we will have some project with them. And I would like to have 3 or 4 customers per year, big customers in B2B.
Mm-hmm. And have you already talked to some investors or gotten some feedback as well?
Yes, I have got about 2 small private investors, and I'd like to present this pitch deck before some funds. I am talking with Telia Impact Ventures. We will call tomorrow or after tomorrow, but I'd like to present it before some funds, and we will see.
Okay, very cool. Okay, then. Thanks a lot for all our startups in the program. As you see, they're all sweet deals, hopefully, or just ask us if you are some investors and want to contact them. And then we will move on with the panel discussion. So all the panelists, you can turn on your cameras. As well as Erkki wanted to bring out the Slido thing. Can you share that? If you still want to get some questions answered on Slido, then just go there and type in impact investing and ask whatever you want to.
Yes, indeed. We'll be mainly using Slido, or we'll be mainly using Slido, but also if you're more convenient in Facebook, then should. So now we're kind of putting up this panel discussion all over Central and Eastern Europe. So together with me and Karl, we have today here Peter Vitek from the co-founder of Telia Venture Partners, Telia Impact Ventures, sorry. Then Marge Maidla from Limitless Impact Fund from Estonia, Martin Duhacek, hope that got wrong. Right, a philanthropist and an investor, also in Telia Impact Ventures. We have Andronol from Reverse Resources, as well as Peter Bacha from Miwa. So for the audience, if you have questions, go to slide.do and use a hashtag impact investing to ask the questions to the panelists. And there is a small delay in the live feed as well, so we'll be looking at the questions regularly and hopefully get a chance to answer them all. So first of all, cheers to the panelists. You can all, I think, unmute yourself if you don't have too much background noise. I guess it's okay if you have the mics on at all times. So first of all, let's start, as you already got the introduction round in the beginning. Now let's start. How would you actually define impact investing, or why is impact investing different than regular investing? And then again, how do you make sure, or how do you are sure that the investment that you are doing is impactful? Maybe that's more a question to Limitless and Telia, and then to others as well to give their point of views. So let's start with Morgan.
Yes. So you asked why impact, right?
Yes, why impact, and why is it different than regular investments, and how do you make sure that your investment is impactful? Mm-hmm. Do you measure it somehow?
Exactly. Yes. So it really depends of the company and the product that is being built by the impact company. which translates into how much we can measure the impact as well. But what we are after at Limitless, we want to understand the specific quantitative metrics as well behind the companies. So if they are building something good for the environment, for example, we want to be able to eventually measure the tons of reduced waste, for example, or tons of reduced CO2. So something where we can actually put the number behind. And same for the societal problems that are being solved as well. For example, if we look at health or let's say education, we can measure how many people actually get help, let's say from digital health companies. And there we can measure basically people affected or lives saved or something like this. However, this data comes only if companies already have been operating for some time. So we always don't have that luxury and the data there. So then we just need to really use our logical thinking and then talk with the founders as well to understand what is their own motivation behind building impact company. So if you build an impact company, you are specifically solving a problem either in environmental related problems or societal problems, so to say. And if you can reason that, then for those companies who are just starting out, that's the start basically.
So practically taking, so if I'm a startup and I have a very cool environmental or social idea that I want to make the lives better or the environment greener, and I come to Limitless or to Tilia, and then you say that, but you don't have any kind of environmental assessment done yet. So I don't know how much CO2 I'm saving. So what happens then? Do you have your own tools, or you send me, go home, be back in 2 weeks and tell me?
So it's more conversation than we do have our own methodology, how we go about measuring the impacts. But as I said before as well, it really depends on the sector and the stage of the product. If we can see that the team is sincere about the impact, then we will try to figure out the metrics to measure together. And this is something that we specialize in as well. We help really the teams to figure out their impact KPIs. And as they go about building their products, we help to build up the data part as well, then to actually collect the data and then compare the KPIs to the actual results that may come a bit later.
Okay, cool. So Peter or Martin, if you have anything to add to that, to the first kind of introduction round, or maybe you can spice it up with some examples that maybe you've seen, you've heard, you've assessed, you've done due diligence and found that the startup is not impactful whatsoever. Or has there been any such cases? Peter, I can see you're unmuted, so you can go ahead.
Erki, you overestimate me because you always ask like 7 questions at the same time. So I'll try to answer at least some that I still remember. Well, when it comes to impact, I mean, first of all, we're all learning, right? And we need to pay respect that it is truly complicated. I mean, I've never met anyone yet or any methodology that provides a single silver bullet answer or perfect answer to the context. So the context is crucial. But, you know, building on what Marge has said, I would say perhaps 3 things. First is intentional versus byproduct. Is the impact truly, you know, the raison d'etre of the company, why it's being co-founded, or is it a byproduct of a standard finance first startup? And of course, this is hard to tell. And there, you know, I've already met some people who kind of paint their startup green because they feel this is now the hype or something like that. So it also boils down to building a relationship with the co-founders and see how serious they are about impact. Because in some cases, there can be a mission drift. That, you know, they start with impact, and if they find something more profitable but less or zero impact, they kind of drift towards a different business model, and it's okay. So in cases where the impact is not inherently connected with the business model, we incorporate the mission drift clauses into the convertible loan agreement or whatever. In one case, we even made a section for impact KPIs. And in case the startup meets the impact KPIs, we have lower expectation. And in case they don't meet those KPIs, we have higher expectations in terms of the interest rate for the loan being provided. So that was one thing, intentional versus a byproduct. Second, you know, if you can measure it, it doesn't exist, or you know, the cliche around KPIs and being evidence-based. It is even more true for impact. So we try to be pretty diligent about understanding the theory of change and the cause and effect relationship within the impact value chain. And if there is some evidence about those relationships. So what are the inputs, what are the activities, outputs, outcomes, and impact? And it sounds pretty academic, but basically it should be a common sense thinking that supports the evidence. And I'm very happy to jump with an example if you're interested. And thirdly, to just finish off, is additionality. How are we as an impact investor additional? So in other words, is the venture fundable by standard VCs? And if we have no added value, we're very happy to let the standard VC guys do the deal. But interestingly enough, quite a bit of social entrepreneurs and environmental startups prefer to talk to us first because they like us being obsessed about impact, because they like to have investors who understand them and they share the passion.
Yeah, exactly. And that's I think that's kind of the dilemma here for the startups, because previously we've been working with startups quite some time. Usually if they go to certain investors, we kind of suggest them to don't talk about that much about your CO2 stuff, but rather about the business plan and the business model, right? The financials. So Ann, for example, has it changed over years? I think reverse resources started back in what, 2015, somewhere there. So how have you seen the agenda changing? Is it more green investments, more impactful investments now, or are you approaching the investors differently?
It has definitely changed in the sense that a few years back when we were looking for impact investors, we couldn't find any. Now it's all over. I had a good reflection from a partner in India who was saying that they are also seeing a lot of investors moving into the impact space. And he was giving a kind of a good overview of what it means usually, or what they see is that when investors go to impact space, they start from ground up, from the very basic things like sanitation, water issues, like malnutrition, all these very clear impact topics. Then in their second stage, they move further into topics like housing or food traceability, or kind of like a bit further away from these basic needs, I would say. And only then in the third stage, they are ready to start investigating more complex issues. And because we are in that very complex issue, we are still looking for these impact investors who are ready to talk to us on these matters. And yeah, it's another interesting reflection we got from the EVPA, the European Venture Philanthropy Network. I don't know what the EVPA stands for, sorry. They were giving a very nice overview of the impact investment space, and it like purely from statistics, it shows that like they made a differentiation between impact for investments for impact and investments with impact. And investments for impact clearly have a smaller return of investment, whereas investments with impact have higher returns. And yeah, it was interesting that only 2% of impact funds are flowing to Eastern Europe. So with our rather complex story, working in fashion industry, being based in Eastern Europe, these are all the numbers or all the evidence that we see is just working against us, which is kind of sad.
So that's bad. Let's take that note. I will have the same question to Martin on how the sector is developing, how the impact investors are coming to the market. What's the trend? What have you been seeing from the investor side?
Yeah, hello, and thank you for the question. First, let me thank you for being here with you. It's an honor for me to be here with you. And to the question, I joined Telia Impact Ventures almost 2 years ago. Prior to this, I worked for a typical venture capital fund for long years. And as Silke and Peter founded the first Impact First fund here, it was, let's say, for me, a fulfillment of a dream, because I'm a supporter of the impact project here in Czech Republic for a long time. And this first, let's say, professional fund was for me a really good signal that lots of people and projects will have the chance to continue with their work, let's say, after the accelerators and all the programs, for example, Impact Hub is running here. And that was a moment when I started to look, let's say, in a big retail, what's all is happening in the ecosystem, not only here in Czech Republic, but let's say also in other countries. And maybe I'll share you one image just to give all the listeners or watchers the briefly overview how the European ecosystem looks like right now. I try to share my screen because there is a beautiful project that could be inspirative for all the startups and all the, let's say, players that are thinking about what to do, where to go, who to contact. And as we are talking about the providers of the capital, so as you can see, it's called impactdatabase.eu, and it's a project that's trying to map the impact environment. And there is the category of the asset managers, and you can see there is a lot of, for example, funds providing the financing stuff to the impact project. Yeah, this is our beautiful fund in Czech Republic. But you can see all around the Europe, the Western Europe is lots of possibilities to get to the financing. And
in Estonia, there's also one.
Sorry?
In Estonia, there's also one dot I can see on the map. Is it? That is 2 dots even.
Yeah, 2 dots. Yeah, so, and there are also contacts and everything. So, but if I should answer your question briefly. So all the numbers we are seeing in all the public reports, and also how the leaders of the big funds and all the authorities are leading their talks. So it's obvious that the amount of the capital going to the impact is increasing rapidly each year, not by single of percent, but these are huge jumps in tens of percents. And I think this is getting us a big chance to change a lot, because the venture capital and the impact capital are one from the most important drivers of the development of, let's say, all the projects and trajectories of the economy. And right now there is happening a lot here in EU and also in the States. And everything is confirming that the impact investing will be maybe the driver for lots of change within next years.
Perhaps if I may add, yeah, Martin, I think it's a really interesting story, because, you know, this is a philanthropist who became an investor and then turned from a moonlighting in impact investing to becoming a professional. So I think it's also a case what's happening, that, you know, there were venture capitalists and business angels who were doing some philanthropy and perhaps trying small ticket investments into social enterprises. And Martin is a great case, and he has a whole portfolio, especially in the food sector, that he made a personal investment into sustainable and organic startups, and now joining the team to take it to a more professional level. So I think that's a really interesting development there.
Thank you for sharing, Peter.
Actually, that's a question from the audience as well. Like, how what's the easiest way to get into impact investing as a small investor?
Seems that it's a topic that's gaining interest nowadays, right?
Just come to us.
Yeah, I think there is more and more chances to do this. There is lots of let's say angel investor networks that are taking these small tickets, and I think they are also in demand, or it's possible to find it. And I think this is a good way how to join a party of more experienced investors. Yeah, and also as more and more funds is getting into the playground, so I believe there will be more and more chances to give your own capital to the impact investing.
If I may add, I mean, it really depends how much money you have. If you want to go more institutional, just to illustrate, when we were doing fundraising, the ticket size minimum was 40,000 euros to be an LP in our fund. But of course, if you have more or you want to go alone, you can always co-invest, get in touch. If you have smaller tickets, it's really important to get in touch, to become a part of the community, and perhaps try to do first deals. And I would suggest to co-invest with others who have taken the due diligence and have the means for analytics and managing the impact and reporting on the impact.
Have you tried crowdfunding?
Carl, is a question to me or to
anybody?
Anybody.
It's getting good. No.
Since I didn't speak, I would just briefly answer no. But no crowdfunding worked for us really. It was considered, I think, about 3-4 years ago when we were sort of starting our business. It was quite popular, but it was evaluated that our product is too complex and it's more B2B, of course. So the crowdfunding was not really a way to go.
But Petra, you said as well before that you wanted a person in your team who had getting investing or investment experience. So what were the biggest hurdles, or where you thought that, damn, I need somebody with me?
Yeah, I think it's overall to have the right expectations when you enter the meeting room with the investors, and I think it's quite common for founders have a lot of passion, of course, into the project and believe that the product is ready to fly. And then you enter the room and there is a lot of questions and a lot of doubts. And you know, my background is in business, so I had expectations on a sort of, let's talk in a sort of a level of business. But when you enter from the startup perspective, or when you are a startup and you enter a community of investors, I think they sort of have expectations from you. Okay, we can help you, but you also have to somehow prove yourself in sort of basic levels. And I think it took me personally maybe about 2 years to get into a sort of good understanding what the expectations actually are, because I was pretty much coming to with a different agenda. I was like, okay, well, guys, we have a business here ahead, so what are we going to do? And there was more like, yeah, but your pitch deck, and it was a very different. So for me, I had completely different expectations, completely not the ones which were needed. So that was for me the advice to. But I'm also not a typical startupist. I would say maybe I don't have the age of a 20-year-old startupist, and I have built a company before. So it was a specific case, but yeah, it took me some time before I was able to actually get the right wave in the meeting and get actually something out of it. And it was a good experience, but it could have been shorter.
If I make just wanted to say that to become an impact investor, my suggestion is to be ready to start on a very heavy learning curve. The investor that we work now for 2 years with, when I met him first time, he stood up at a speed dating event and acknowledged that he doesn't know much about circular fashion, but he wants to start investigating it. And he took a year to really learn the topic. And our first meetings were just explaining the whole sector in very broad general, not even talking about our business case. And then a year later, we started to talk about the business case as well. And now they are investing heavily in all areas in that space, because impact investing, as I understand, is different a bit, that normally you go into different segments of the same topic more thoroughly, maybe. So it really takes a lot of learning to even understand what it is.
Yeah, just a quick remark for our audience who's not very startup in the startup world. If Ann is saying speed dating with an investor, it means there's these particular events when startups go and meet with investors for 3 minutes and then switch, right? Just a remark. So we cannot go over the current situation that we're in, and the audience is also asking about the COVID-19 crisis, how has this impacted? Because in my understanding, it's looking from the clean tech investments and from the clean tech kind of awareness side. And I understand it's also similar to impact investments. Nowadays, people don't have to explain too much to investors or funds or angels what is impact investing. So the curve has been a learning curve. So it's been going up rapidly. So people understand what's clean tech, what's impact investing. And then COVID-19 crisis hit. How has that helped? Has it helped? Has the crisis actually given like a positive side to it, or has it influenced it negatively? Because we know that the venture investments have gone, well, they went down or they decreased for a couple of months, right? In spring in 2020. Now they're kind of slowly getting back on track. Is it now like the time for the impact investments and clean tech investments, as the people in all over the globe, they understand that everybody has an impact, and somehow I think these kind of green stuff, these environmentalism has also gone into people's head, and also the awareness of social impact of people, of startups, of an individual, of a company. We have CSR, the ESGs, the SDGs, and all these Gs. So let me take that up in a short format. How has COVID-19 influenced your industry? Let's start with Ann. Maybe you had mic open anyway, so just shortly, and then.
When I think about the business versus the investment, the two different worlds, I think the COVID situation definitely has impacted the fashion industry heavily. For 1 month, the whole production stopped in April. But interestingly, the topic that we are in hasn't been affected really. It's quite the opposite, because now everybody has so much dead stock, excess materials at hand. They are starting to look into like, what else could we do with it? There is a much better ability for us to talk about digital solutions in the developing countries, where like normally before we couldn't really catch high level managers on an online call. We had to be there on the ground. Now it's so quite much easier. When it comes to the impact, or sorry, the investment side, I think it has gone more difficult because there are less events. We can't really mingle, and yeah, face-to-face impression matters a lot in this early stage of getting to know people. So in that sense, fundraising right now is really a much bigger challenge.
So the kind of overall efficiency in the industry is really evaluated, right? But like the close encounter with investors is still very crucial, as I understand. Now, Petr Bacha, from your side, how has this impacted your industry?
Well, you know, sustainability has been a growing topic, so I think it just continued, and I'm not sure whether it's going faster or slower with the COVID, but generally it's a good momentum for technology company in the environmental business. So I think we have been actually having a very good responses to what we do. I would say there is a very good positive element in the e-world communication, just like Ann was saying. You know, it's very fast to get the people to talk to, and I think we have actually managed to do a very, very good connections in the last 7-8 months. Of course, our technology is a hardware which is implemented in the real world, so the implementation has been slowed down. So from that perspective, it's influencing the fact that we cannot gather data, we cannot prove some of the cases we would like to already have finished, and of course speed up our business. But on the other hand, we had more time to develop and more time to sort of fine tune some of the elements of our technology. So I would say for MIBA, it has been really like a neutral effect. I think it was sort of positive, surprisingly, if you would ask me in the summer. But now, of course, we are quite ready to get out of it, and generally a bit tired of that. But otherwise, I think we would be sort of COVID neutral as far as the effect.
Martin, from your side, what's the view, your point of view to it? You've been 2 years in the Telia Impact Ventures. So the first year was without COVID and the second year was with COVID. So can you compare those 2 years?
I think it's not the case we should compare these 2 years. I think it's better to compare the impact on our portfolio, because as Petr mentioned already in his presentation, so we have various projects. And of course, the impact differs. It is the same as in the typical venture capital and the typical startups. Unfortunately, the COVID hit hardly several areas of the business. And if you have a startup in any of the difficult areas, so it will be hard. And so we have investees like Miva, where is Neutra. We have investees, for example, the glasses, when it is really, really difficult for them because it is not able to travel. So they focused on developing their teams all around the world, and they were able to do it online. This is a nice surprise. And for example, our last investee, the Circle, they got really nice run because they are focused on some systemic change in industry, in the waste management in industry, and the change is bringing, let's say, significant economic savings for the companies. So the motivation for the companies to adopt their methodology, their approach, is much more higher than we expected as we did the investment. So, and this is the same, but what I would like to mention in the topic of the COVID crisis. So approximately 2 months ago, we shared an interesting article in Telia. I was not able to find it right now, unfortunately, but the main message from the article was that if we compare the typical venture capital investments to the impact-based investments, so let's say the vulnerability of the impact-based investments is less something like 40% lower than if you take the typical VC's investments. So it is interesting because it seems that the startups based on impact are less vulnerable by such a long crisis that the typical VCs. Maybe Petra would like to do some comments on this because we talk about this internally. What could be the reasons of this?
Well, I'll show the picture. I'm just looking up for it. So give me a second. But real quickly, the companies that are more aligned with the environmental, social, and governance standards are more resilient to crisis. They perhaps have lower short-term returns, but are much more resilient to crisis. And I honestly don't have the data at hand. Why is that case? But I would assume it's the people care about purpose at their work. And so that's one reason. Second, customers tend to be much more loyal to companies that are authentic. And thirdly, those investors that are behind more purpose-driven companies tend to be much more patient and understanding and accommodative in times of crisis. So I think that combined, these three factors combined and alone can make quite a bit of a difference.
Thank you. And maybe may I short return to the question with the crowdfunding, because I think it's closely connected to this, what we are talking about with Petra. I'm a little bit skeptic in the area of crowdfunding, just because it seems to be an easy way to get the money from lots of people, and you are taking small amount of money. But if I should compare it to have a really serious impact investor like VR or another funds and so on, so you are not getting only the money, but you are getting a partner. Let's say for us, each of our investment is a journey. It's a nice story we would like to share with the founders. And we are really a partner for them. Not only somebody who gave them some money in the beginning and then is just looking on some reports, but we are working on daily basis with our projects and helping them where we can, or where we are able to help. And I think this is the important stuff in the startup life cycle, to have the right partner in the beginning and to have the partner that will support you in such a crisis like we are right now in. So thank you, Peter, for sharing.
You want to slightly comment also on the picture you're sharing, Peter?
Yeah, I mean, I don't want to read it for you, but basically the green line shows the performance of sustainable funds that are aligned with the ESG criteria I was mentioning, the environmental, social, and governance standards, while traditional funds are demonstrated by the blue line. So basically, there is some research quoted on the right side that shows the difference in the performance. And yeah, I think I don't want to just go into the detail here. I'm also mindful of the time. I think this is the main message.
If I may comment, then I'm super happy to see this graph, because this is something that we kind of have a feeling about, but we don't have evidence by ourselves. That it's majority of our discussions with investors are about why is our traction so small in the beginning? Why can't we show bigger traction already now? And like this curve that the green line shows, that it goes really slow in the beginning, but it has potential to jump so much higher later on. This creates a very high sense of risk for investors. And as a impact project, it's really difficult for us to kind of struggle out of that discussion that, yeah, there is opportunity. You have to come into the topic with us to understand the opportunity instead of looking only at the numbers.
Mm-hmm. Yeah, maybe I will comment on it as well, just to recognize what Peter was saying, you know, and I think the word purpose, I think is something I would like to really stress even more. You know, when I started MIWA, the word impact was not, you know, top of my list. It was really an idea which had a purpose, which I liked, which sort of made me happy. And sort of, you know, when you build a company with purpose, you also build a very strong culture, which means you can attract very good people. And as a founder of the company, of course, it's crucial to drive the company into certain direction and clarity. And I think the word purpose for founder, I would say, is more important than the impact. But of course, you know, if we have to have the right purpose. I think that helps a lot to actually have a long-term meaning for the investors as well, and for the people on board.
Mm-hmm. From the trend side, I think, Peter, you can now stop sharing. From the trend side, Mark, I would like to ask your insight also from the Estonian market. So the Limitless Fund, have you seen increase in deal flow? Has there been any more kind of applicants turning to you, and what's their main message? What has been their main message?
Yes, so definitely we have seen growth in the past year. We started in 2019 in September, and I think we have had more than 210 companies on our table who are in one way or another impact companies from Estonia and from the region. And it's very nice to see that the change is coming from the root level. There was just this startup program happening called Starter. This is meant for students mostly. And this year, there were 8 impact companies in the finals out of 11. And the actual winners, the top 3 basically were all impact-related companies who are building either sustainability solutions or some solutions for societal impact. So we can see the change coming from every kind of direction in that sense. And just to add for the previous Corona topic as well, I really think it depends of the sector who, for example, EdTech and health tech basically got an acceleration thanks to Corona. There are so many more customers who need, let's say, educational online products right now compared to 1 year ago. So in that sense, it really depends of the sector as well. There are some parts where Corona has had positive effect as well, and for some other sectors where it's not the case. But to answer your question, we are seeing growth when it comes to impact companies.
That's really nice to hear. And Marga, we are about to wrap up. We have 3 minutes. So the last words, I would like you all, let's start with Marga, to say a couple of words about what are you looking for in a startup, if you're a fund, or in an investor, if you're a startup. So Marga, what are you looking for in a startup? What is it that you assess the most? And now make your ears speak, the audience, the startups and the investors as well.
Yes. So in my opinion, there's no real difference in between just usual startup and the impact startup, except the impact part. So you still need to have a very good product that your customers and consumers want to consume. You need to be able to grow and scale your product. You need to have an amazing team. You don't need to have SGG logos on your pitch deck, but you need to understand what is the impact that you're creating and about to create, and why, and how we can help you with that. So number one thing, you need to have a good product or service, or a plan for it, the prototype.
That's a perfect answer. How about Tilia, Peter and Martin? What would you add here?
Well, perhaps I suggest we divide it, and I'll speak for Tilia, and I would be interested to hear what Martin looks for as a person, as a private impact business angel. Well, I'll go with the traditional investors cliche. First and foremost, I'm looking for fantastic teams, diverse teams that have good track record and traction on the current startup. So that's first and foremost. Second, as Marga put it, in other words, business model, a sustainable, financially sustainable business model, and a reasonable go-to-market strategy and growth strategy. And thirdly, I'll be looking for a passion for the purpose or impact. Have the liberty and luxury to choose who to work with, and I'm also keen to learn. So, for instance, working with Petr Bacha, it did hurt a little bit when he was talking about that it's a pain in the ass working with the investors, and it took him 2 years to accommodate. But I also did learn a lot, and I'm 100% confident that himself and the team he has gathered has passion for purpose, and that's a relationship that goes both ways, and that's for me a really ideal scenario.
Martin, from your side.
Okay, so I'll pick up Peter's question. In Tilia, it's, let's say, strong rational process. As Peter mentioned, there is a checklist, and as Tilia is a regulated fund, taking care about the money of 23 investors. So you have to be sure in each detail that you are doing the investment correctly. If you are an angel investor and you are investing your own money, so you can work more with intuition. If I like the founder and I like the idea, so I can take my money and invest. this is not possible in the regulated structure. And I think this is the main difference. And also this is the biggest challenge because you should act as an angel investor in the right phase of the project. Because if you are doing this investment approach too late, so you can harm the project, because the startup has strong defined phases, and for each phase that is the right bunch of investor you should talk to, because the money is bringing you another experience, another support, another, let's say, professionality. So all the time I am trying to act right in this and to help the right startups with the angel money in the right phases. So I think, Peter, does it cover your question?
So there's more of this, your gut feeling and the synergy you get with the startup.
Yeah, but if you talk to almost each of the angel investor, yeah, I don't believe the gut feeling, but the own intuition, because you don't have enough time and energy to do the due diligence like we are doing in Telia.
Mm-hmm. Mm-hmm. No, absolutely understandable. Now turning to the startup's point of view, what is it that you are looking in investors? In each of the healthy relationship, there has to be two parts satisfied.
I'll go. So sorry, Peter, if I made some painful remarks, but I would say it must depend, and I don't have that experience for long, but I think it must depend a lot on what stage of the company you are looking for investor. And I think it is especially very important, of course, at the very start. You know, when you are small and the team is small, and you have to choose people who will really work with you. So I think for me, it's a lot about trust. So I think it's very important to somehow recognize that the people are, you know, somehow there is a good chemistry, but it's also a community which is to be trusted. So this is what, you know, I said it on the different panel couple weeks ago, you know, that I was very committed to make it happen with Telia, although it was very long and very hard, because it was generally believed, and I'm very happy for that, you know, that we have a good chemistry and there are good people and we can work together. And that's I think the base for me. And of course, as we grow a bit, there is different criteria as well, you know, as a real help on the product side, and you know, maybe some other elements, and of course there is money involved, but I think at the very start it comes to people, and I think that's very crucial.
Thank you. And finishing this up with Anne.
I started to understand that I'm rather picky when talking to investors.
That's good. That's good. It has to be there.
Because yeah, I skipped that question about crowdfunding. We actually tried to go on a crowdfunding platform once, and then we backed out of it again because we realized that we don't want, we really want to have smart money, and we don't want to scare off smart money by taking in not so smart money. And like, it really needs to be a partnership. It's like, it's not only about money, it's really about what can we do together. Like for example, this we are working closely together with Stichting Doen in Netherlands, and they really are creating this close partnership feeling by really helping to push the impact investment space further to come into the fashion industry topics, and really create opportunities to speak about it openly, that this like fashion industry is one of the biggest polluters in the world, and it will not change until we get money flowing into that problem. And this is not something we can do alone. So this kind of partnership is something that we are really looking for, and yeah, come along to the journey.
No, being picky is absolutely a very good characteristics for you, I guess, because that is a relationship you're turning into, and some say it's even more harsh than your marriage, right? So we're gonna stop here with this note, and I want to thank the panelists we have today here. So we're sending you a very distant high five or a knuckle break, and thank you.
Sorry.
Thank you very much. And today's event is going to be wrapped up by Karl. So saying why it was made.
I was just wanted to say a big thank you. It was a wrap up to our 3 months program with 3 startups and trying to raise awareness on this subject as well for general. I hope we managed to succeed even a little bit in that. And big thanks for EIT Climate Kick, who has been funding this program, and for our partners as well, like Impact Hub here. And we hope to continue next year the collaboration. So a little dent has been made, and hopefully we can make a larger impact as well from our side.
Let's start the 2021 with new, fresh, impactful ideas. Right. Let's make a positive impact this time.